Hello, this is Matt on the Moon Lambo channel. A top XRP chart analyst says that holding XRP is going to pay out huge, and he reveals what his expectations are for the remainder of 2021, so I wanted to talk a little bit about that. And also, wasn't it just yesterday, quite literally, where I made a video talking about, it was a general video about price, but I was really highlighting the fact that you're being manipulated. People, the narratives come out from certain entities, Goldman Sachs, and they want you to think that crypto is terrible and awful until they're in the market and making money, and then it's the best thing since sliced bread. And then even after that, it still seems like they're timing strange snippets of information to come out depending on where we're at in the cycle. And so I talked about that, and here we are one day later, and what headline are we looking at now? Here's a piece from Zero Hedge. JPMorgan becomes first big bank to give retail wealth clients access to crypto funds. JPMorgan. How many of you out there listening were around in 2017? I jumped into crypto in November of 2017, and I remember what Jamie Dimon was saying about Bitcoin and crypto. So I've got to touch on this a bit. It's ridiculous. So basically, in a nutshell, though, it's like it was bad. Don't touch crypto back in 2017, but now that it costs way more, the water's warm. Come on in. Of course. Thank you for nothing, JPMorgan and Jamie Dimon. But before I go further, I do want to be clear, I don't have a financial background of any kind. I am not offering financial advice, and you should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who enjoys making YouTube videos just as a fun hobby about Ripple and XRP and crypto. And from time to time, manipulators like JPMorgan and Goldman Sachs. So there we are. As I record this, XRP is at a little over 60 cents. Market is up today. Bitcoin's at $32,680. Market cap for the asset class, 1.35 trillion, and Bitcoin dominance at 45.13%. And so there were actually a lot of articles, and I'll start out with this, and then I'll get into the XRP stuff, but there were a ton of articles covering this. JPMorgan, which is big news, and it's actually positive. It's genuinely positive. You know, more of the legacy financial world at jumping into crypto. Yeah, of course, I'm all for that. And so I came across this specific article thanks to the blockchain backer who retweeted it, but there were a ton of different articles, and actually even this article, it was written based on a piece from Business Insider, which was the first to report on this, but I did want to share with you a little bit of what the blockchain backer wrote. He said, during the whole bear market, stay away. Crypto market cap rises up 1,200% from bear market lows. You may buy now. Ain't that the truth? And so look at this. Here's how the article reads. I'm going to cover a couple parts of this. We sure have gone a long way the past 4 years. Back in September 2017, billionaire JPMorgan CEO Jamie Dimon lashed out at a relatively new, for boomer institutional investors, asset class, Bitcoin, which Dimon said won't end well, predicting it will eventually blow up as it's a fraud. And that's a quote. He said, it's a fraud and, quote, worse than tulip bulbs, end quote. And he's referencing there tulip mania. If you don't know what that is, just Google tulip mania. It was a nonsense bubble, and it did go to zero. But not all bubbles, like bubbles form in all asset classes. Again, you got to be aware of this. A bubble occurring in an asset class is not in and of itself an indication that the asset class is going away forever at some point in the future. Bubbles just happen. But anyway, the piece continues. And the kicker. The CEO of the largest U.S. bank said he would fire any employee trading Bitcoin for being stupid. And so I remember hearing all this in 2017 because, look, this was just, 2 months before I jumped into crypto. And it took me all of I don't know exactly how long. It may have been like a week or two, whatever it was, but I eventually had my epiphany in short order, which led me to recognize that the crypto asset class wasn't going away. And that's when I recognized that businesses can exist that could not exist, business models that could not exist without a technologically sufficient decentralized cryptocurrency that has also an open market price. And all of those things are key because it also has an implication of trust, right? And so I recognize this, and I'm sitting here looking at this billionaire here running JPMorgan. I'm like, you don't know what the hell you're talking about, and I've been in this for 2 weeks. And I was right. I maintain I'm absolutely correct. And I could be betting on all the wrong horses, meaning all the cryptos that today I think it makes sense to have long-term viability. I could be wrong about all of them because we don't know how the market's going to unfold. But there will still be decentralized cryptocurrencies that overtake the ones that I think make sense now if that happens. So I'm still right on the asset class, even if I'm wrong on all the horses. But to this point, like especially if you take a look at XRP specifically, it's genuinely being adopted. So I don't suspect that's going to be the case here. But anyway, let me cover just a little bit more of this piece because it is rich. Like, this is good stuff here. It's very satisfying, to be honest with you. But anyway, fast forward to today when everything has changed. Not only has JPMorgan launched a Bitcoin fund for rich clients after years of bashing crypto, its market quant's publishing a weekly hit piece bashing Bitcoin and its crypto peers, but it now published a weekly report looking at all the latest news and trends in the crypto realm. But as Business Insider reports today, JPMorgan has become the first major bank that, quote, gave its financial advisors the green light to give all its wealth management clients access to cryptocurrency funds, end quote. And so it was, there were wealthy investors that JPMorgan allowed to have access to the asset class, but now they're saying everybody can now that it's way more expensive. Now, and yes, I firmly believe it's way more expensive, but it's also true I believe the best is yet ahead. And the prices that we see for the crypto asset class, like just the fact that the crypto asset class only has roughly a $1.3 trillion market cap at the time I'm recording this, that's going to look like child's play if you fast forward a decade. I firmly believe that. And so what is it that their customers can invest in? Well, JPMorgan itself actually isn't purchasing any cryptocurrency. Or if they are, then it's certainly being done in secret because what JPMorgan has done is and this is fine actually, I don't have a major problem with this, but JPMorgan has approved Grayscale's Bitcoin Trust, Bitcoin Cash Trust, Ethereum Trust, and Ethereum class vehicles, as well as Osprey Funds Bitcoin Trust. That's what was reported by Business Insider. And so these trusts, which you can purchase from Grayscale, if you're buying this from Grayscale, you're actually not buying the underlying asset. You're buying a trust that is representative of the underlying asset, and then Grayscale's actually holding the asset. So for people that maybe want exposure to the crypto asset class, but they have no interest, or they're not the type that would go open up a Coinbase account or whatever the cryptocurrency exchange might be accessible where they live. They don't want to do it just like, no, just here's the money. I don't want to deal with it. I don't want to deal with custody. I don't want to learn anything about it. Here you go. Here's my money. And so there are people that want that, and so I functionally don't have a problem as long as the cryptocurrency is actually being held by the entity that's selling the trust, as is the case with Grayscale here. So I have no problem with that. And so then JPMorgan, they're just another middleman. But they've got such a big client base, it makes all the sense in the world. So actually genuinely no beef with that whatsoever, as long as their assets being, underlying assets that are being held. Which is why when you're talking about futures contracts, which aren't settled with typically like physical Bitcoin, I'm a little bit less interested. Now, I'm not saying those shouldn't exist either, but it doesn't excite me as much. If there's an underlying asset that's being held, that's important because that affects the supply and demand dynamics. So to me, much better. So and so they've got, again, such a huge client base. It is interesting though, at least today, and this will probably change, but JPMorgan's advisors, as this article states, they can only execute unsolicited crypto trades, meaning the customers have to come to JPMorgan advisors and say, hey, I want crypto. They can't bring it up on their own. But again, as time passes, I suspect that's going to change. And now there's this from DIY Investing. He tweeted out the following: the most bullish scenario that can happen for XRP. And boy, is he ever so bullish on XRP, and I happen to be myself as well. And so DIY Investing, he put out a new video on XRP. And he said a lot of stuff, actually. And so I'll break down some of the highlights, but for those that want like the actual technical analysis breakdown, which is not what I do on this channel, I encourage you to check out his video. He did a great job breaking everything down here. But he did say that as far as XRP price, it went a little bit lower than he expected. Because how low did it get recently? Down to like 52 cents. I think it's somewhere there about. But initially it seemed most likely XRP wouldn't drop below like 70 cents after it hit its 2021 high of near $2 or so. But he explained in his video that there's a failed Elliott wave count. That's what occurred, and this actually means XRP is going much higher because, in his opinion, XRP running up to $2 earlier this year was just part of an initial impulse rather than truly being the next leg up in the cycles. And so, if you're already seeing that without the next impulse, you might imagine, when this thing finally does go, and plus there's all this time for consolidation. We're seeing that anyway. But anyway, he went on to explain that, and I've been saying this on my channel the whole time I've been running it, because it was clear even when I launched my channel in December of 2018, like historically XRP trades sideways, and DIY investing, he did bring that up. Like XRP, it's correlated to the rest of the asset class. It moves with Bitcoin and everything else, but it's the least correlated typically out of just pick a random period of time. XRP is typically the least correlated out of the top 10 cryptocurrencies by market cap. And so it might look like, if you look over too short a time period, it might look like XRP is not correlated, but if you zoom out on a chart, you can visually see it. If you have human eyeballs, you can absolutely see it. It is moving with the rest of the market, clear as day. But yeah, it does trade sideways for a longer period of time before intensely breaking out. It's just a laggard historically. And so the thing is, people that don't realize that, they frequently end up selling too soon. And so, well, you can imagine why. It's because what are humans doing? Impatient creatures that some of us are. Not me. I'm Mr. Patient. I will out-patient anyone else. But many people, after holding XRP for a long period of times, they look at the opportunity cost. They feel as though, oh my gosh, all these other cryptos, they're taking off, and I coulda, woulda, shoulda. I should have bought those other things. Which is a really unsophisticated, immature way of looking at the market, because once those things have already gone, it's probably too late for that portion of the market cycle anyway. It probably is. At some point, you'll just see a collapse, in all likelihood, in the not-too-distant future, because that's the way money works in crypto. It cycles through every coin. And so, for the people that actually hold, like, those are the people historically that have held XRP that get rewarded, not the ones that get impatient and put their money in something else. The people that do that historically have ended up just missing the bull runs. And I'll never forget, I've told this story a handful of times over the years. I'd been in crypto all of 6 weeks, or however long it had been, 4, 5, 6 weeks, whatever it was. And a few days before XRP went on its biggest bull run ever, when it went from 20-something cents up to almost $4, I watched somebody on YouTube, and he was talking about he'd been holding XRP so long, and it just wasn't going. And my gosh, all the opportunity, all these other coins went off. And of course, the childish thing about all of this is you didn't know those coins were going to go off. You don't have you're not like having these visions just pop in your head about what's to go. Like, you're not a psychic, right? So it's like the fact that you have all this information after it occurred, it's useless. It doesn't matter. And so you're just thinking, oh God, if I had just put it there. But you wouldn't have, because you didn't have information that would have made you do that. And so it's completely childish. But anyway, this YouTuber, he'd been holding XRP, I can't remember how long. It was for some time, maybe over, I think he may have said May of 2017. I'm looking at that, I'm like, my gosh, a little over half a year. So anyway, it happened to be the case that a few days before XRP went on its biggest tear ever in history, up to almost $4, this guy sold all of his XRP. And I remember watching that when it happened, and I was like, ugh. And I was still new to crypto, but I was like, that might not be a good idea. And then it didn't take long for that to prove to be the case. So I happened to have jumped into crypto at a really strange time, right when the most fun parabolic portion of all of it was happening. But still, even at that point, I was just always a long-term oriented individual, and so it's anecdotal. It's one human, but there's so many people that feel that way. You get impatient, this and that, and then you get out. And this is true not just of XRP, though. I mean, if you treat any crypto like this, just chasing whatever's hot in the moment, well, by the time it's hot, it's too late. And people just don't get this stuff, and it's just a shame. And so, anyway, DIY investing, he also pointed out that XRP's actually been in an uptrend for over a year at this point, and he absolutely still expects XRP to hit $28, roughly, by the end of this year, 2021. And so, I'll say this, like, I don't know where the XRP price is going to go, and I don't make price predictions, but if Bitcoin hits certain high levels, the idea of XRP getting to the $20 to $30 range doesn't seem wacky to me for this market cycle, but I don't know if that's going to happen. It might not. Maybe the blockchain backer's correct. My fellow XRP YouTuber, he says XRP more likely to go to $10 to $13, though he does acknowledge there are some unlikely scenarios where it could go much higher. but we'll have to sit tight and find out exactly what this looks like. But I do feel very confident at some point, as long as I'm just patient enough, that I'll get to experience another parabolic XRP bull run that's going to put the 2017 bull run for XRP to shame. That's what I'm anticipating is going to happen. And so I'm just going to hold until we hit that point, because data shows people that hold get rewarded. People that are short-term thinking and they're traders and they chase whatever's hot at the moment. The data shows those people, their portfolios do not perform as well, and many of them end up just losing a bunch of money. So I just decide that I'm not going to behave like that. And I'm willing to bet that my approach to all of this will yield better financial results than the people that are emotional and do chase what's hot in the moment and don't have sufficient patience and a reasonable time horizon. I bet I'm going to beat them. And we'll find out what happens. Maybe I'm wrong, but I sure as hell don't think so. So anyway, I'll go ahead and wrap up there, though. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.